Good morning, everyone. My name is Stephanie Hughes. I am the finance reporter at the Financial Post, and I am very excited to be moderating this panel on digital currencies. It's a really big topic, and unfortunately, we only have 30 minutes with our knowledgeable panelists here, so let's dive right into it. I'm joined by two experts on the topic with me right now, which is Miguel Diaz, who is the head of the Toronto Innovation Hub Center at the Bank of International Settlements, and Tom Zschach, who is the Chief Innovation Officer at SWIFT. So to kick things off, I wanted to start with some brief introductions. And Tom, we'll start with you. Can you briefly walk us through what your experience has been with digital currencies to date?
Yeah, absolutely. And I'm really happy to be here with Miguel. And we were speaking before the session about how nice it is to demonstrate kind of the public-private approach that's really required to explore and experiment with central bank digital currencies. So we'll kind of just start on the top in terms of what we're doing here and how we're approaching this. And it really starts with our strategy at SWIFT to deliver instant and frictionless transactions globally. It's ambitious. We're making great progress on that, and we need to accommodate new things that are happening in the marketplace, and in this case, digital assets, and more specifically, new forms of currency and digital forms of currency. And so we are trying to figure out how we can help our customers, our community, and it truly is a community. And we're looking at ways where, what can we do and leverage the strengths that we have, if and when central bank digital currencies are launched. And I think it's probably more when than if, but that's not our decision. And we're not advocating the creation of any digital asset, including a national currency. But the question is, if we and we do what we do in terms of bringing the community together and providing the network reach in a trusted way every day, how do we position ourselves? So we spoke to a number of central banks, well, actually a lot of central banks, and one of the surveys from the Atlantic Council says there's 110 central banks and countries looking at, exploring or somehow trying to figure out what to do with the digital version of their currency. So we spoke to the central banks, and I can tell you, just to kind of summarize what we saw, there's really different approaches and objectives that are being set for societal or economic value from the central banks, and it really varies per country. Things like driving competition, things like making access and inclusion more available were high on the list. But they do vary. But we also know from a technology point of view, there's different technologies being evaluated. There's different standards. There's different protocols. There are different approaches. And when we looked at this, we said, if this actually plays out like this, it could lead to a situation of fragmentation. And if you're creating that new digital version of the currency, you could potentially build a digital island. And we don't get the sense that most of the central banks in the countries are trying to do here. So we really tried to figure out how we can help. We decided to focus our efforts on interoperability and the interlinking between the existing payment rails that we have today and the new evolving digital asset networks that will be coming with the launch of the CBDCs.
For sure. It's always interesting to see how many moving parts are happening all the time here. Miguel, if you can walk us through your experience with digital currencies at the Innovation Hub, and just a double barrel of that question, when we're talking about digital currencies, can you provide a brief definition of what exactly we're talking about here?
Yeah, of course. When we talk about digital currencies, we might think about the digital currencies that are provided by commercial banks. But I think we can leave that aside for a second and just focus on what the central banks are doing now. And when you focus on even the definition of a CBDC, you have many people having different ideas in their mind. So it's important to set the conversation and start with the definition so that we speak the same language. Basically, a CBDC is a digital representation of high-powered money. So this means a liability directly with the central bank. And just by setting this definition, we set aside some of the discussions that are out there. So think about this discussion between wholesale and retail CBDC, and think whether central banks have already a digital representation of M0. So every central bank that manages the monetary policy implementation accounts on computers, they have a CBDC on the wholesale side. When we switch to the retail side, we have really interesting questions, and these questions interact very deeply with the financial market infrastructures that we already have in the ecosystem. And this is quite important, and this is where the central bankers have to take advantage of all the information and all the characteristics that we already know about from financial market infrastructures in order to advance and to provide these services in a more thorough basis. So many central banks are trying to create central bank digital currencies based on existing functionality by financial market infrastructure. So this is not about building things on a completely different technology, but just evolving and putting different layers on top of the infrastructure that is already out there. And I think it is quite important. From the perspective of the BIS, what we're seeing is this huge experimentation all around the world of different countries and groups of countries that are testing hypotheses and are doing actual experiments in different realms, which are quite interesting. Cross-border is one, but we have also delivery versus payment solutions, payment versus payment solutions. And one very important, for example, is offline functionality. So if society is going digital, how can we manage to provide these digital settlement services for individuals that do not have an access to the web? We need to generate solutions in that realm, and of course, all of these have to be done with security. So all of these efforts and these experiments all around the world are like finding a nice place to be shared within the innovation hub, and that is what we're trying to do there.
For sure. Thank you so much for breaking that all down. I could not have done it better, so thanks for that. And while I have you, Miguel, I'm going to put this next question to you. Digital currency is becoming a reality in other jurisdictions, and in Canada, that conversation is going from conceptual to practical. With all that in mind, how do we deal with this issue of exchange rates and interoperability? How do we get these digital currencies to really just talk to each other?
Yeah, that's a great question. And I think when we talk about interoperability, we can see it at least in 3 different levels. So the first level is how we manage domestic interoperability. So how we generate this digital currency solution and make this speak with the other things that are out there in a little bit in the idea of generating a platform so that everyone can connect to that platform and take advantage of the huge network externalities that we can get out of there. The second level is how do we manage cross-border transactions even within the same currency. And that presents a certain level of challenges there. But when we talk about cross-currency and cross-border, then we face a completely difficult and different environment. And we can see 3 dimensions here. One is the technical dimension, so how we manage to get a system that speaks in a certain cryptographic language to speak with another that speaks another slightly different language. So that is one level of complexity. We need to get the technologies to speak to each other. The messaging element is fundamental. The second dimension, which is much more complicated to solve, so that one, the first one was the easy one, okay? And there is a lot of money that is being put in terms of trying to solve these technical issues of interoperability. Now, the second one is more complicated. It has to do with liquidity. So imagine that you have a pair of currencies for which there is not a complementary demand. You need to go and search for a third-party currency in order to make this settlement actually happen. And this really complicates things. So we need to put pieces of technology that can make more efficiency this use of liquidity so that more transactions can be settled. The third dimension, which is even more difficult than the previous one, is how do we manage to get homogeneity in terms of the policy requirements on different countries. And this becomes even more complicated when we think about, for example, AML-CFT and principles-based policies. And when we think about risk-based policies, we can code things that are very clearly stated, but when we're talking about principles-based regulation, this thing becomes really complicated, especially in an environment, as Tom said, in which 110 nations might have 110 different ways of looking at this. So we need work in these 3 dimensions: technology, liquidity, and also, and more importantly, probably in the policy side of things. Think about AML-CFT, but also think about privacy. Different countries have very different views on this, no?
For sure, yeah, and there's a lot of different layers of complexity. So Tom, I want to get you to weigh in on this too. How do we begin to smooth over this exchange rate issue with all these complexities that have just been described?
Yeah, it's really nice to be on the panel with you because you set some things up so nicely in such nice context. And really what we've been looking at is how do we learn as much about this and kind of go back to what what kind of the drivers on and what the central banks and then also our community and the banks are looking for. And again, the central banks don't want to build islands. They want to have this interoperability. They want to have this, an environment where the rules and the regulations are normalized, so that we remove friction cross-border and in different currencies. So, and then the banks and our community want to leverage the investments that they made in standardization, in the PKI infrastructure, in the SWIFT infrastructure, right? The community is undergoing a gigantic migration now to ISO 2022, which gives us richer message data, right? So there's really important investments that are made there. So we did a lot of work on our own, and we didn't want to kind of come in with a blank piece of paper and have a brainstorming session. So we did a number of experiments. In 2021, we published a white paper, which was largely the BIS Model 1 that they had laid out. And then we did a further set of experiments, which is really aligned with the interlinking in BIS Model 2. And that worked really well. And what we did is we actually, I think this was fairly bold, proposed a solution on how we think cross-border payments would work that tied together existing payment rails as well as new digital networks, whether they ran on more traditional technology or a ledger-based technology. And it was very successful. So what we did is we actually, and I think this is a great role and a place for SWIFT to kind of coalesce and bring the industry together, is we put it into a sandbox. And we said, can you validate our assumptions? Do you agree with how this be delivered? Are you happy to continue to leverage standards? Of course, the answer is yes. And so we put that out there. We were able to actually validate that with our community. And then we decided to build a real solution, a real innovation solution that we put into a sandbox. And if people want to know, we won't have time to cover it today, but if you want to know more about what we did and how that went about and the validation, the feedback that we have from 18 central banks and commercial banks, you can Google the SWIFT CBDC Sandbox results paper, which we just published in March. It's very detailed. It's a very nice piece of work, and it's very clear about how we think we can solve this. But it all comes down to collaboration. It all comes down to humility. We don't know the answers. There's going to be a lot of different requirements. There's going to be a lot of different drivers, and we want to work with the industry to try to figure out what is the right way to implement that. And that's done through experimentation and exploration, and that's actually a great place for SWIFT to be, and that's a great place for us to do what we do, which is to help our customers service their customers better.
Amazing, yeah, and I'm so glad you brought up collaboration and community, and I'm going to keep on you for this next question, because you kind of touched on it, but to me, the whole key to successfully implementing a digital currency is that collaboration. It's important to get everybody on board. You kind of touched on how much collaborating you were doing, but how much more are you hoping to do? What does the collaborative process look like so far? And what does that knowledge sharing process look like?
Yeah, and so, like I said, we've anchored this on the sandbox experimentation, actually turning that into an innovation solution, to try to drive this, validate assumptions. We actually learn a lot together. The devil's always in the details, right? So we had to propose something, we thought, so that people can start to get comfortable with it, to give us feedback, for us to adopt that model. At the same time, it is going to fall back on the standards that have been agreed and are being upgraded now. And then we also have actually later on this year, coming online, a new state-of-the-art platform, which actually moves SWIFT from kind of the traditional secure messaging for the last 50 years. We turned 50 years old this year, to really kind of the next generation of transaction processing and doing that in an instant and frictionless way globally. Mm-hmm. So it gives us a much better platform and approach to leverage not only what we've built up to now and how we've built the trust and the operational excellence that we support the community with every day, but actually an entirely new platform to be able to respond in a fairly efficient way to new assets as they're created in the industry.
For sure, and I love that element of, okay, we're all learning at the same time here. Miguel, I want to put the same question to you and get a sense of what that collaboration looks like at the Bank of International Settlements, and what does each iteration look like?
Yeah, so let me first stating why collaboration is necessary, and we saw a very nice picture of why collaboration is necessary. FMIs and payment systems are becoming quite complicated. And with the exponential evolution of technologies, every one of those pieces that we saw in that drawing are changing quite fast. Mm. So just keeping up with that technology is a very big piece of work for one institution to keep up. So this, together with the fact that these financial market infrastructures now have to provide more functionality, think about conditional settlement or the programmability of money or whatever you want to call it. All these additional functions have to be put on top of the fact that you have to keep up with all these pieces moving quite fast. So this requires collaboration. But not just from that perspective. When you see digital financial services, the infrastructure that you use has a very interesting cost structure. You have very high fixed costs of establishing the infrastructure, but then copy-pasting that infrastructure all around the world or using it for the next transaction, the cost of that is practically zero. And this pushes you to try to exploit the economies of scale and just develop very few times so that this can be used around the world. And the BIS, being the central bank of the central banks, has a very privileged position to do this. This is why the BIS created the Innovation Hub within the BIS. And the three mandates of the hub are the first one to keep up with all these technologies and try to identify what are the trends that will touch on central banking services and financial services as a whole. The second one is to create pieces of technology to take advantage of this cost structure. So if we manage to pull together the resources of different central banks, and also not just central banks, but also the private sector, and we can provide these underlying pipes for the financial ecosystem once, we can just replicate them around the world. So what we're seeing now is that each country is doing the same research and development on probably very similar elements. And what the hub is trying to do is just provide this arena in which people can share these experiences and can learn from each other as opposed to doing the same research once and again. And what goes for research also goes for the potential deployment of pieces of technology. So those are I think, important elements in terms of just creating this discussion for this arena. And the more the merrier. So as more central banks join the system, as more private sector entities join the system, the better the basic infrastructure will result.
Exactly, and it sounds like that collaboration across jurisdictions has really led to a lot of progress being made across the jurisdictions and right here at home. The progress has been staggering. We've seen Bank of Canada make great strides. Other central banks are taking notice. So Tom, looking ahead, and since we've got Canada's payment ecosystem here, thanks for coming, by the way, and why should digital currency be a priority for everyone in the room here today?
Yeah, that's why they invited me to give free advice to all the people in the Canadian payment business. Well, I'll tell you what things to kind of consider here, because the priority for virtually every central bank is our domestic uses. Again, for things like inclusion and access and competition, they're good goals and they do differ per country, but there's some common themes there. I think when we started with the conversation, what we said is that we encourage the central banks and strategic partners and other banks to think a little bit, what's step two in that? So even if it's not an immediate priority, to issue the digital version of a Canadian dollar, there's other implications for that, right? And there's kind of very, I think, obvious use cases. A Canadian citizen takes a trip to Paris, goes to holiday in Paris, and they get a digital euro, or they can only deal with a merchant in that way. How do you deal with that? How does that work? From a business point of view, from a business process point of view, who based on the rules, obviously, of how something like a digital euro would be used. A business based here in Toronto wants to pay a Chinese supplier or be paid by a Chinese company, right? And they can only pay you in digital renminbi. So I wouldn't, one thing I would suggest that you consider is, even if it's not going to be domestic used or issued inside of Canada, that there could be other implications that need to be dealt with and need to be considered. And some of those are going to be driven by laws and regulations, and some of those are going to be driven by your desire to service your customers better, because that's what your customers want, and that's what banks and PSPs and everybody does. They try to address what their customers want. So I would just look a little bit deeper into kind of related issues like that, and what might come on day two once you get past the domestic use cases and people, of course, travel around the world.
For sure, absolutely. Travel's a really big thing, especially nowadays. Miguel, people like you and Tom, you live and breathe digital currencies. Other people might not be quite up to speed on it. Why should everybody here care and be as passionate as you guys are about digital currencies? What's the promise that they bring here?
Let me again cut it into three reasons why it is very relevant to have digital currencies. So when you take 2 steps back and see how our lives are being touched by the digital economy in almost every aspect, you start to think that eventually we will start getting basic services digitally. If someone is cut out of the possibility of doing electronic settlements, then that person might be cut out of basically receiving this basic services, and it will be, he or she will be cut out of the society. And I think that is not a reasonable assumption or something that we would be willing to accept in any modern society. So it is important to think about ways in which those segments of the population, even if they are small in some jurisdictions, how to get them access to do electronic settlements. And the CBDC is one way of doing this, one way of providing access to those individuals that are not commercially viable from a private perspective. So just setting a worst case scenario, so some simple functionality that would allow people to actually access a settlement service from an electronic perspective. And this seems like in the future might become some sort of a right of people just to have the possibility of settling transactions electronically because they could be cut out. So that is number one, inclusion, how we get those segments of the population that are right now excluded into the digital economy. The second one has to do with building a platform structure that could allow for all the participants in the ecosystems to basically have a reach to the whole network. So you might have the best idea in payments, and I think everyone in the room knows, but if you only have 10,000 customers and the possibility of these 10,000 customers to reach each other, your idea is as good as dead. If we manage to get the CBDC as a platform to which every one of these walled gardens have to link, then we open up the network externality for everyone, and we set up the place so that competition can actually take place in terms of the ideas and not in terms of the size of the network that you had before. And this might generate a much better set of ideas to produce better solutions for our society. So that's the second point. The third point, thinking about all these new technologies that are coming into the system, for example, the settlement conditionality or programmability of money. So lots of people are thinking in different ways of how to implement this, and all the options or many options can be good options. We need some focal point around which innovation can just flourish. And the central bank has garnered trust from societies for many, many years. So it makes a lot of sense to take that trust that was garnered through like correct and consistent behavior by the central bank to set focal points on top of which this innovation can flourish. So with these three elements, I believe that we can push our societies to a better position. And this does not only apply for developed nations. Think in developing nations, and we have exactly the same three elements at different levels of importance. But I think these three elements are fundamental, and why we should get into the public provision of this public good, not substituting whatever is out there that is provided by the private sector, but just providing this basic layer that can allow people to join the digital economy.
Exactly, and I think that's another one of those key elements here where in a digital world, we can't afford to ignore these digital currencies, this new way of smoothing over issues. When I speak to some people, they talk about cross-border payments being clunky, expensive, and if we have like some sort of framework that mitigates these issues, it sounds like it's a net positive for everyone, and like I said, too important to ignore, so from a policy level, private sector level, so it's interesting to see how many moving parts are happening currently, and just how much development we've had so far. So I know we're coming to time here, and I don't think we have any time for any lightning round questions, unless you guys can say in a minute. where you see payments digital currencies, what the progress is going to be like, I don't know, 5 years from now.
5 years from now. In a lot of ways, currencies are almost digital already, right? So this is a new form with kind of new drivers and new value. And I also think there's going to be a lot of other kind of similar offerings or alternatives to that, right? So we're seeing now where some banks are looking at their own version of a bank coin or tokenizing bank deposits, for example, with a lot of the same kind of characteristics that you get in a CBDC. There's private stable coins that are out there. So I would just keep an eye on kind of the evolving areas in this kind of new forms of I'd say regulated assets and value, right? That's probably the more interesting part at this point. I also think one thing to consider is we really need to kind of keep separate the digital form of the currency from the channel or the rails it's delivered on. And so I think when you issue whatever country issues the digital version of the currency, they need to make that work with Apple Pay. And if you don't, then you're not going to get the kind of adoption and usage that you'd hope. So I'd really kind of think about the digital form of the currency as separate from the channel and the way that is delivered and the experience for the customer, which I know most of the people in this room are focused on. So try to keep those separate, but it's super interesting, right? There's great opportunities here. There's risks that need to be managed. This needs to be done in a responsible way. So nobody's going to kind of rush to the finish line here. I think in any part of the infrastructure, when things become systemically important, they require a matter of care and kind of risk assessments that, it's a big deal. And so there's a lot of work to do, and I don't think anybody's going to rush into it. And I think we're privileged to kind of be in the middle of that to help figure those problems out and ultimately implement solutions at scale worldwide.
For sure. Miguel, you want to close this out with a 1-minute hot take on where you see digital currencies going?
Yeah. So if you compare this with an evolutionary process, I would say that we're like in a Cambrian process. So everyone is doing crazy things, and 110 countries are trying different things. And in 5 years, we will probably see that some of these things failed and some of these things were successful. And eventually, we will end up with something that is robust and that is reasonable for providing societies with this basic service, as I see it. The fact that we are thinking about CBDCs does not imply that this will eliminate the existence of other solutions, such as tokenized deposits or other sorts of provision of value or provision of settlement functionalities. I think that we are right now in this evolutionary process trying to mix the ideas and trying to mix the requirements, both from the general public, from societies, but also from the existent industry that has provided services for a very long time for societies with a very positive result. And we have to take and to be clear on which of the elements that existed on that infrastructure need to be reused so that we can provide a much better service without having to pay for completely new infrastructures. So I think we are in a process in which we have many elements of experimentation, but we also are looking back into the existent elements to see which ones of those need to be considered for the next stage, thinking about the future of money and the future of how societies will settle their transactions.
Mm-hmm. Absolutely, that's a great way to close it off. And thank you for everybody for joining us today. Thank you, Tom and Miguel, for providing your expertise. And also want to thank Payment Summit for inviting me to moderate this panel. And it's been a great conversation. So thank you again.